Imagine walking into your CPA board exams, totally prepped to calculate complex corporate profit margins.
Right, you think you're ready for all the heavy financial math.
Exactly. And then suddenly, out of nowhere, a multiple choice question asks you exactly how many years in prison a convenience store owner gets for selling a strawberry flavored vape.
Oh man, yeah. Feels like you accidentally wandered into a criminal law exam, doesn't it?
It really does. But well, welcome to the reality of sections 144 to 147 of the tax code.
It's definitely a shock to the system for a lot of candidates.
Right.
I mean, you spend all this time in your review thinking taxation is just, a financial calculation.
Just applying percentages to a tax base, right?
Exactly. But then you hit these specific excise taxes on tobacco and modern smoking alternatives, and suddenly you're dealing with physical chemistry, mechanical engineering, and incredibly strict behavioral enforcement.
And that is exactly why we're doing this special ICPA Review Radio Deep Dive today. So if you're a determined CPA board exam candidate listening right now, grab your highlighters.
You're going to need them.
Yeah, because our mission today is to conquer the intricate and highly testable excise tax rules on traditional tobacco, heated tobacco, and vapor products.
You absolutely have to master this. I mean, this specific area of the tax code is a heavy favorite for the board examiners right now.
They love it, don't they?
Oh, they do. Over the last few years, the government introduced all these complex amendments to regulate modern smoking alternatives. Examiners absolutely love testing your ability to spot the difference between traditional tobacco rates and the newer vapor product schedules.
It's just prime territory for those really tricky multiple choice questions.
It really is.
Okay, so let's unpack this. Because before we even look at a single tax rate, we have to talk about how the Bureau of Internal Revenue actually defines these products.
Right, because if you misclassify the product in the exam question, your computation is just going to be wrong from step one.
Exactly. The tax code categorizes these products purely by their physical mechanics.
Yeah, the foundational divide here is combustion. You have to ask yourself, does the product burn or does it do something else?
Like, Section 147 lays down these incredibly strict statutory definitions based on that physical distinction.
It's honestly a lot like classifying vehicles for registration at the LTO.
Oh, that's a great analogy. Like you have your traditional gas guzzlers, you have your hybrids, and then your full electrics.
Exactly. And each gets treated differently based on what's under the hood. Here, the BIR classifies products by whether they burn, heat, or vaporize.
So let's start with the gas guzzlers, right? Traditional combustion.
Right. Under Section 147, we have two main traditional categories that rely on combustion, meaning they're actually burned to be consumed.
And those would be cigars and cigarettes.
Yes. And the legal distinction between the two is entirely about the wrapper.
Wait, really? Just the wrapper?
Just the wrapper. So cigars are rolls of tobacco wrapped in leaf tobacco. But cigarettes are rolls of finely cut leaf tobacco wrapped in paper, or really any other non-tobacco material.
Wait, hold on. Let me make sure I'm getting this. So if I'm a manufacturer and I take premium, highly expensive Cuban leaf tobacco, but for some weird reason, I wrap it in standard paper.
The BIR suddenly treats that luxury product like a standard cigarette.
Wow, that's wild.
Yeah, the tax code does not care about the quality or the prestige of the inner leaf. It only cares about the strict statutory definition of the wrapper material. Vapor wrapper means it's a cigarette, period.
Okay, that is a fantastic trap to watch out for on exam day. But obviously, technology stepped in and created our hybrids and electrics, right? So the law had to adapt.
It did. And that brings us to heated tobacco products, or HTPs.
Okay, how are those defined?
The law defines these as tobacco products consumed through heating the tobacco, whether electrically or otherwise, just enough to release an aerosol, but without actually burning or combusting it.
Ah, so the crucial element here is that HTPs still involve actual physical tobacco.
Exactly. Which brings us to the full electrics, the vapor products.
Right. Vapor products are electronic nicotine and non-nicotine delivery systems. I know in your review materials, you'll probably see the acronyms NDS or ENDS.
Right, and these use a liquid solution, or gel, that transforms into an aerosol without combustion, usually using a mechanical or electronic heating element.
You know, this raises a really interesting question for a board exam scenario. What if the examiner presents a tricky hybrid device?
Oh, they love doing that.
Right. Say a question asks you to classify a product that uses a flavored liquid cartridge, but the device also heats an actual stick of tobacco to produce the vapor. Which tax rate applies?
That is a classic board exam trap,
Right.
and you must follow the strict statutory text. If the device is heating actual tobacco to release an aerosol, it falls under heated tobacco products.
Even if there's liquid involved.
Yep. But if it is transforming a liquid solution or gel into an aerosol, and the device utilizes a cartridge or tank system, then it is a vapor product.
Okay, so when you're reading the word problem, you really need to scan for those exact clues. Look for the words leaf tobacco for traditional, heating tobacco for HTPs, and liquid solution or gel for vapor products.
Perfect summary. So we know how to categorize the vehicles. Now let's talk about how the government charges the toll fees.
Yes. Shifting to the tax mathematics for traditional products under sections 144A and 145, this really forms the baseline for the entire chapter.
Let's start with raw and prepared tobacco under Section 144A. This includes tobacco twisted by hand, prepared tobacco, or even fine-cut shorts and scrap tobacco.
Okay, what's the rate there?
Well, the baseline rate established way back on January 1st, 2013 was 1.75 pesos per kilogram. But if it's tobacco specifically prepared for chewing, it was slightly lower at 1.50 pesos per kilogram.
But as a reviewer, I can tell you right now, the exam isn't just going to ask for a static 2013 rate. They want to test if you know how to escalate that rate to the current taxable year.
Precisely. For Section 144A, raw and chewing tobacco, the law mandates that these rates increase by 4% every single year thereafter, effective on January 1st, 2014.
Okay, got it. Moving down the production line to Section 145, which covers cigars and cigarettes.
Right. The tax structure completely changes once you've manufactured a finished consumer product.
I always tell reviewees to think of the cigar tax like a luxury restaurant bill. Like, cigars get hit with a combo meal tax. You pay a percentage based on the price of your meal, plus a fixed cover charge just to get in the door.
That is a really great way to visualize the computation. For cigars, the tax is twofold. First, you calculate an ad valorem tax equivalent to 20% of the net retail price per cigar. And second, on top of that 20%, you add a specific tax of 5 pesos per cigar.
Okay, I really want to pause on that net retail price phrase, because if a problem gives you the gross selling price, you can't just blindly multiply it by 20%.
No, you absolutely can't. And examiners know candidates rush this part. The net retail price explicitly excludes the applicable excise tax and the value-added tax. You have to back those out.
Right.
Furthermore, the BIR doesn't just let manufacturers make up this price. The law states the net retail price is determined by the price at which the cigar is sold on retail in at least 5 major supermarkets.
5 major supermarkets.
Yes. And here is the kicker. The law specifically excludes retail outlets, kiosks, convenience stores, and sari-sari stores from this determination.
So if I'm advising a client on their tax base, and I try to use their local convenience store sales data to compute the net retail price, I'm just violating the tax code.
Absolutely. The exam might give you a multiple-choice question asking which venue is valid for determining the net retail price for cigars. If you see a national chain of convenience stores as an option, just cross it out immediately. It has to be major supermarkets.
Got it. So cigars get the combo meal tax, but cigarettes, they just have a flat ticket price.
Yes, exactly. For cigarettes, the schedule scales up based on a flat specific tax. Effective January 1st, 2020, it was 45 pesos per pack. By January 1st, 2023, it hit 60 pesos per pack.
And it's important to note that the tax code has finally equalized the rates for hand-packed and machine-packed cigarettes, right? To close that massive historical loophole.
Yeah, that was a huge change.
Explain that loophole, because understanding the history really helps candidates remember the rule. How are manufacturers exploiting this?
Well, historically, hand-packed cigarettes were taxed at a lower tier. The legislative intent was to protect local laborers and smaller, traditional businesses from being crushed by massive automated factories.
Which makes sense on paper.
It does. But what actually happened? Large manufacturers realized they could save millions in excise taxes by setting up massive warehouse-scale hand-packing assembly lines.
Oh, wow.
Yeah. They were essentially producing at an industrial scale, but claiming the lower manual labor tax rate.
So the BIR eventually caught on.
Exactly. They realized the intent of the law was being abused, and they equalized the rates. A cigarette is a cigarette, regardless of how it goes into the box.
And speaking of the box, a pack legally means 20 units. The law specifies they shall only be packed in 20s, or combinations of not more than 20.
Right. So if a word problem tries to trick you by mentioning a specially branded, limited edition pack of 25 cigarettes,
you immediately know that manufacturer is in violation of the packaging regulations before you even compute the tax.
spot on.
Now let's talk about the annual statutory increases for these finished goods, because this is where a lot of candidates get their percentages tangled up. I have a memory trick for this.
Oh, let's hear it.
If you are taking notes, write this phrase down in bold. Classic 4, Modern 5.
Classic 4, Modern 5. Okay, let's break down how to apply that on exam day.
So Classic 4 refers to the raw, traditional, unmanufactured tobacco we discussed at the very beginning. The twisted and chewing tobacco. That increases by 4% annually, starting back in 2014. But Modern 5 applies to all the finished modern consumer goods. The specific tax on cigars, the per-pack tax on cigarettes, and as we're about to see, HTPs and vapes. All of those increase by 5% every single year, effective January 1st, 2024.
Classic 4, Modern 5.
Mhm.
Memorizing that will absolutely save you crucial minutes on the computation portion of the exam.
Totally. So I've covered the traditional leaves and wrappers. Now we're diving into sections 144B and 144C, which cover heated tobacco and vapor products.
This is the new era of taxation. And because it's relatively new, examiners are heavily testing the nuances here.
Let's start with heated tobacco products, or HTPS.
So HTPs have a schedule that mirrors cigarettes quite closely. They are taxed per pack of 20 units. Effective January 4, 2020, the rate was 25 pesos per pack.
Then it scales up.
Yes, it scaled up annually, hitting 32.5 pesos by January 4, 2023. And applying your mnemonic after 2023, it falls under the Modern 5 rule, increasing by 5% every year, effective January 1st, 2024.
But vapor products. Man, this is where the math gets incredibly specific and where you really need to understand the why behind the law.
Definitely.
For vape liquids, the tax completely depends on the chemical composition of the nicotine. The two categories are nicotine salt and conventional freebase nicotine.
Right.
I tell students, think of nicotine salt as an espresso shot, highly concentrated, and freebase is like a large iced coffee, more diluted.
That's exactly right. And the BIR designed the tax structure around that exact concept. They realized that consumers self-regulate their nicotine intake.
Interesting.
Yeah, because you need roughly 10 milliliters of freebase liquid to get the same chemical effect on your body as just 1 milliliter of nicotine salt. The government equalized the tax burden based on the effect on the human body, not just the raw volume of the liquid in the bottle.
That makes so much sense. They changed how they measure the volume to match the physical hit. Let's look at the actual computation for that.
Okay, let's do it.
For nicotine salt, the espresso shot, the tax effective January 1st, 2023, was 52 pesos per single milliliter. So a tiny 30 milliliter bottle of nicotine salt in 2023 would have an excise tax of 30 times 52 pesos, which is 1,560 pesos.
Correct. Now compare that to conventional freebase nicotine, your large iced coffee. By January 1st, 2023, the rate scaled to 60 pesos per 10 milliliters.
Right, so if an exam gives you a 100 milliliter bottle of freebase in 2023, you don't multiply by 100. You divide the 100 milliliter by 10, giving you 10 units. Multiply those 10 units by 60 pesos, and your tax is 600 pesos.
Now, pay very close attention to this next point, because the law contains a massive computational trap for vapor products.
Oh, lay it on us.
The text explicitly states that these rates apply to any liquid substance intended for a vapor product, regardless of nicotine content, including nicotine-free liquids.
Wait, hold on. I need to push back on that. Excise taxes on tobacco products are universally justified as sin taxes because of nicotine's addictive nature and negative health effects.
Usually, yeah.
So if there's literally no nicotine in the vape juice, how does the BIR justify taxing it under this specific section?
It's a great question, and it really shows how the government's approach has evolved. The BIR argues that they are no longer just taxing the chemical, they're taxing the delivery mechanism and the behavior itself.
Wow.
Yeah, the act of vaping is what they are regulating, regardless of what's in the tank. From an exam perspective, this means zero nicotine does not mean zero tax.
That is huge.
If a word problem hands you a 50 milliliter bottle of zero nicotine freebase vape juice, do not write down zero for the tax due. You still have to compute the standard excise tax.
Okay, that is a brutal trick question waiting to happen. So we've categorized our products and we've calculated the taxes. But as we know, a CPA doesn't just compute taxes. A CPA ensures strict compliance.
Because if a product doesn't leave the factory legally, the computation just doesn't matter.
Exactly. Let's move into administration, penalties, and the very dangerous below-cost trap.
Compliance is heavily tested here because the government relies on strict administrative controls to prevent smuggling. For example, no tobacco products produced for export can be removed from their place of manufacture without posting an export bond.
And how much is that bond?
This bond has to be equivalent to the excise tax due if they were sold domestically.
Which makes sense, right? Because the BIR knows that if a manufacturer says, hey, these million cigarettes are for export, don't tax us, there's a huge temptation to just turn around and sell them on the black market in Manila tax-free.
Exactly. The bond secures the government's money just in case the product accidentally doesn't make it onto the ship. It's basically an insurance policy for the Treasury.
Sure.
And the reporting requirements are just as strict. Manufacturers and importers must submit a sworn statement of their volume of sales and removals for each brand. And this is due within the first 5 days of every month.
Okay, mark that down, everyone. First 5 days of every month. If a scenario says a manufacturer submits their sworn volume statement on the 10th of the month, they're in violation.
And if they misdeclare information on those sworn statements, the BIR commissioner can summarily cancel their business permit. If a corporation is found liable, they will be fined treble. That is 3 times the aggregate amount of deficiency taxes, surcharges, and interest.
But the regulations go far beyond just tax collection and paperwork. They actually enforce health policies directly through the tax code.
They really do.
For instance, the manufacture, importation, sale, and distribution of vapor products with any flavoring other than plain tobacco or plain menthol is strictly prohibited. Which brings us back to my strawberry vape scenario from the intro.
It does. And the age restrictions in this section are fascinating because of a textual contradiction in the law that is absolutely perfect for true-false questions.
Oh, I love these. What is it?
Well, if you look at Section 144, it explicitly prohibits selling heated tobacco products and vapor products to anyone below 21 years old.
Okay, so the legal age in the tax code for modern products is 21.
Yes, but keep reading the exact same section. Later on, when discussing vapor products, the law prohibits the sale to minors and then explicitly defines a minor as anyone below 18 years old, referencing the Older Tobacco Regulation Act of 2003.
Wow, so within the exact same tax section, it says don't sell to anyone under 21, but then defines a minor as under 18? How does the law get written like that?
It's a classic case of sloppy legislative drafting, honestly. When lawmakers amended the tax code to include modern products, they just copy-pasted references from older health laws without reconciling the ages.
But for exam purposes, how do you navigate this?
If you get an excise tax question specifically concerning the sale of HTPs and vapor products under Sections 144B and 144C, you must rely on the explicit 21 years old threshold for the penalty. The specific, updated prohibition for these modern products sets the bar at 21.
That's a fantastic nuance. Now, let's talk about one of the most severe financial penalties in this entire chapter. What happens if a manufacturer or seller tries to undercut the entire market and sell their tobacco products at insanely cheap prices?
You're referring to the below-cost trap. The law explicitly prohibits selling tobacco products at a price lower than the combined excise and value-added taxes imposed.
So they essentially set a hard floor price.
Exactly. If you sell below the sum of the excise tax and the VAT, the penalty is staggering.
Let's put a scenario to this. Say I'm advising a foreign investor who wants to open a massive vape distribution company in Manila. They want to come in aggressively, sell below cost for a year to capture market share, and just eat the losses. What happens to them?
Well, your client is going to jail, and then they're getting deported.
Yikes.
Yeah, the seller is punished with a fine of not less than 10 times the amount of the excise plus VAT due. And there's a hard minimum. The fine cannot be less than 200,000 pesos.
And the prison time.
Plus, there is mandatory imprisonment of not less than 4 years, but not more than 6 years. And to address your foreign investor scenario, the law is absolute. If the offender is an alien, they shall be deported immediately after serving their sentence without any further proceedings required.
10 times the tax, minimum 200K, up to 6 years in prison, and instant deportation. That is intense.
Very intense.
And finally, before a product even leaves the factory, there are inspection fees under Section 146. It's a rundown of fractional amounts, like 50 centavos per 1,000 cigars, 10 centavos per 1,000 cigarettes, 1 centavo per milliliter of vape liquid.
You know, you have to wonder, why does the BIR charge a literal centavo? It's clearly not generating massive revenue.
Right. Why bother collecting a single centavo?
It's an administrative tether. Those fractional fees exist to fund the physical presence of BIR inspectors at the factory floor and to force a mandatory paper trail for every single unit produced. It's not about the money. It's about control and auditing.
Which brings us full circle. We've covered a massive amount of ground today. As promised, I want to deliver your exam day checklist. If you're walking into your taxation board exam tomorrow, here are the 4 absolute must-remember takeaways from sections 144 to 147.
Yes, hear them.
Number 1, the base. Memorize the classic 4, modern 5 rule. Raw and chewing tobacco statutory rates increased by 4% annually starting in 2014. Almost everything else, finished cigars, cigarettes, HTPs, and vapes, increases by 5% annually effective January 1st, 2024.
Good one.
Number 2, the computation. Vape tax strictly depends on the physical liquid type to match the human body's intake. Nicotine salt is your highly concentrated espresso shot, taxed per single milliliter. Freebase is your diluted iced coffee, taxed per 10 milliliters. And crucially, this computation applies regardless of whether the liquid actually contains nicotine.
Do not forget that zero nicotine rule.
Exactly. Number 3, the penalties. Beware the below-cost trap. Selling below the combined excise and VAT floor price triggers massive fines of 10 times the tax due, with a minimum of 200,000 pesos plus 4 to 6 years of prison time.
And immediate deportation for aliens.
Right. Number 4, the age limit. For heated tobacco and vapor products, selling to anyone under 21 is strictly prohibited and penalized directly within the tax code, despite the older 18-year-old references hiding in the text.
That is a rock-solid checklist. Mastering these exact thresholds, knowing the structural difference between per milliliter and per 10 milliliters, understanding that a zero nicotine vape is still taxed. I mean, that is exactly what separates a candidate who is just guessing from a candidate who is passing and becoming a CPA.
Exactly. You can't just read the tax code. You have to understand the physical and behavioral mechanics behind it.
And as you finish up your review for the night, I want you to step back and think about the bigger picture. Notice how this specific section of the tax code acts far more like a health and criminal statute than a purely financial document.
It really does.
By embedding FDA regulations, outright flavor bans, strict age limits, and severe imprisonment penalties directly into the tax law, the government is weaponizing taxation. It's not just about raising money for the national treasury anymore. It's actively being used to engineer societal behavior and enforce public health.
Right.
It really makes you wonder, as a future CPA, when you're advising clients in this industry, is your primary job going to be managing their finances, or are you actually going to be navigating complex public health policy?
That is an incredible point to leave on. You look through an auditor's magnifying glass, expecting to see clean, predictable math, but instead you find a tangled web of chemistry, society, and criminal law. It turns out sometimes the most complex calculations aren't the numbers at all, but the human behaviors they're trying to control. Keep studying hard, trust your preparation, and we'll see you on the other side of the board exams.